Hello everyone, thank you for joining us today and welcome to this educational presentation of a simple process to trade with the trend. Now, I gave this presentation a little while back and it's one of our most popular presentations and I've always been asked to repeat it, so I'm going to repeat it again because it really lays down the foundation and the groundwork for becoming a consistent trader. But before we begin, I actually want to open up your eyes with a few statistics that may frighten you a bit, but I'm not saying them to frighten you or dissuade you from trading, but really just to open your eyes and to see what it is actually about trading that holds so many traders back. Because the facts state that 80% of all traders will ultimately fail or lose money. And when we say lose money, we don't mean you'll go into a small loss or drawdown. We really mean that you'll give up and lose all that you've set aside for your trading, all of your little nest egg. The facts also state that 15% of all traders will break even. Okay, not a large amount, but think of it. Today's markets are very tough, and if you don't lose any money, that's a small feat. But really, after all the time and energy, and most especially the money that you put into trying to learn how to trade, you're really going to have nothing to show for it. You're basically just going to be treading water. So ultimately, what does this mean? It means that only 5% of all traders will be consistently profitable. So roughly, if there are about 100 people listening to this presentation today, only 5 out of that 100 will be consistently profitable. If you want to see what that looks like in graphic terms, we look at this pie chart here. That large portion in red, that signifies the percentage of traders that will ultimately fail. That blue slice in the middle there represents the amount of traders that will just break even, and that small green sliver there will just represent the percentage of traders that will be consistently profitable. Now, it's a little bit frightening, but I really feel that, most of the time traders should be able to be profitable. I know I struggled tremendously when I first started trading, but you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? If there's enough to go around, if the markets are a never-ending source of profits, then why is it that there's only a small 5 percentile that's able to consistently capture it? Well, it really is not that difficult to figure out. In fact, it's actually really simple. These traders, whether they know it or not, are consistently on the right side of the market. To put that another way, they're buying when they should be buying and selling when they should be selling. Now think of your own trading. In fact, go back and look at most especially your last 10 or 20 trades, and most likely there have some losses in there. The reason why you may have lost is because you were buying when you actually should have been selling, and vice versa. But these traders are on the right side of the market. In other words, if the market wants to go up, they're buying. If the market wants to go down, they're selling. Now, this really is not as difficult as it sounds. I mean, I know a lot of people say, well, how do you know? There is a simple process to being on the right side of the market. The only problem is we're usually taught the exact opposite of this process. The good news is that I teamed up with Pro Trader Strategies and developed our new platform, the PTS Primo Charting Platform, where we have a simple step-by-step process that teaches you how to listen to the market so that you know what side of the market to be on. It's that simple. It's that easy, okay? And so I'm going to show you exactly what that process is today and show you how simple it is using our platform to get on the right side of the market with your trades. So this promises to be a great presentation today. Once again, I'm sure you're seeing why it's so popular amongst our students that I present this every once in a while. My name is Steven Primo. I am the president and founder of Specialist Trading. I teamed up with Pro Trader Strategies 9 years ago with one goal in mind, and that's simply to educate traders around the world. We feel that most traders fail because they haven't been given and provided with the proper source of education. One of these today being the topic that we're going to be discussing, the education of being on the right side of the market. Now, I've been trading for 41 years. I started my career on the floor of the Pacific Stock Exchange. Even though my background is in stocks, I've traded just about everything: commodities, futures, Bitcoin, anything you can think of. Now, while I was on the floor for 16 years, and out of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist isn't anyone more special than anyone else. It just means that you specialized in making markets. So if someone wanted to buy or sell a stock, they had to go to the trader who specialized in making a market in that stock. So I specialize in making markets in roughly about 50 or 60 stocks. I traded and made markets during the crash of 1987 and the bull market that followed. So I know what works in terms of consistency and I know what doesn't. So the good news is, once I teamed up with Pro Trader Strategies, our goal is simply to provide you with all the education and things that I've accumulated so that we can shorten your learning curve and teach you how to apply them properly to your own trading so that for the first time you can be in charge of your own trading decisions. So that's our goal, to educate you so that you don't have to rely on anyone or anything else to tell you how to trade. I'm going to show you that very simply today in this simple process for trading with the trend. Now, before we begin, as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this simple process for finding the trend, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. As you're taking a brief moment to view our disclaimer, I would also like to take this time to invite you to follow us on Twitter. There's our handle right there. You may want to copy that down, abbreviation for Specialist Trading. I post different information on a daily basis, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. So there's lots of great free information to learn and to grow in your trading. So feel free to follow us on Twitter. Okay, so as I stated in the very opening statement, we are first and foremost an educational company. That means we're a little bit different from other companies in the fact that we're not promising some system that you'll never have to trade anymore again because it automatically generates all the buy and sell signals for you. It never loses, and it's so simple. All you have to do is just follow the instructions. We don't believe in that. That's the way most traders are educated. And what we want to do is simply teach you how to trade. As you notice here, I'm not saying my goal is to force feed you signals so that you can blindly take them. No, that's the way most other companies operate. My goal is to give you the information that has stood the test of time so that you can ultimately make your own decisions, okay? These are the same techniques. This specialist edge was the same edge that was taught to me some 41 years ago, and what I truly believe has allowed me to continue trading for 41 years. Hopefully this edge will do the same for you. Now, since this is going to be conducted like a class, I do want to take your questions, but please wait till the end of today's class to ask any questions. I have a lot of slides to share with you. Oftentimes, your question is answered on the very next slide. So if you do happen to have a question, please wait till the very end. I promise I'll get to each and every one of your questions. In fact, I will answer only one. That's the most common question, popular one. Is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, if you can't see or hear the presentation, don't worry. We will send you a link to this recording, okay? All right. So with that stated, let's begin. All right, so we're talking about getting in sync with the overall market. We're talking about capturing the overall trend. What if there were a tool that was automatically designed to put you on the right side of the market so that you could be buying when the market wanted to go up and you could be selling when the market wanted to go down? So it would eliminate half of the work on your part so you could be in sync with the overall trend. Well, don't worry. It's not some convoluted indicator that you have to download or something, some master formula that you have to, spend hours putting together a night. It's rather simple. In fact, you already have access to it right now. Because after all, it's just the 50-period moving average, or what we call our buy-sell line, okay? It's that simple. The buy-sell line is the 50-period moving average that you all have probably on any charting software, or you all have right now on your current chart that you're looking at. But the reason most traders fail, even though they may have it plotted, is because they're using it incorrectly. Let me show you the proper way to apply the 50-period moving average, or what we call our buy-sell line. Because in order to apply it properly, all you have to do is actually ask yourself a question. But you must ask this question prior to entering into a trade, prior to pulling the trigger. And that question is, where is price in relation to the buy-sell line, the 50-period moving average, okay? I'm going to say that again. You must always ask yourself prior to buying or selling, where is price in relation to the buy-sell line? And once you ask yourself, you're only going to come up with two possible scenarios. Because if price is above, well then you should only have a buyer's bias and look for buy signals, okay? And conversely, if price is below, well, you're only going to have a seller's bias, and you're going to be looking for sell signals. Now, does this mean that you just say, well, Steve, we have our first close above the 50. Does that mean I buy at the market? No. You need structure. You still need a strategy. You still need some technique for entry. This is just getting you on the right side. Remember, this is what makes traders consistent, by being in sync with the overall trend, by wanting what the market wants, by listening to the market. Well, when price is above, the market is simply telling you, I most likely want to go higher because the overall trend is higher. When price is below, it's telling you it wants to go lower. Let's look at this example here in the spiders, okay? The ETF that represents the S&P 500. Someone looking at this is a weekly chart, by the way, would say, well, Steve, this is obvious. We've been going higher. I don't need anyone to tell me that. Sure, but wouldn't you have liked to know well in advance, let's say back here, that the market wanted to go higher? Well, sure, it would have been simple. All you would have had to do was apply the 50-period moving average, okay? Then ask yourself, back here, where is price in relation to that 50-period moving average? Is it below or is it above? Well, obviously, in June of 2016, it was already above. It had consecutive closes above. So what was the market telling you? That it wanted to go lower? No, it was already telling you it wants to go higher. And until we have consecutive closes below the 50, it still wants to go higher. So you are in sync with the overall trend, and when you buy, most likely you'll increase your odds for consistency. That's the same way to the downside. We look at a weekly chart of GE. Most traders will listen to their broker or some chat room or their brother-in-law and have them make their decisions for them. You know, say their brother-in-law is a stockbroker or who trades stocks, and he says, you got to buy this stock. It's down far too much. It's been oversold. All the indicators are oversold. The institutions want to buy it. So let's say you jumped in here in your long-term IRA account and it went lower, so you bought some more and it went lower. And this is what usually happens to traders. They wanted to make a short-term investment, and now it's turned into a long-term portfolio investment because they're hoping and praying for it to go back up so at least they can break even. This is why most traders fail. If you had simply applied the buy-sell line, you would have asked yourself in advance, well, before I buy or sell that, where is price in relation to the buy-sell line? And as far back as February of 2017, over a year and a half ago, you would have known that the market wanted to go lower because it had consecutive closes below the 50. All right, the market wasn't telling you it wanted to go higher. It was telling you it wanted to go lower. So why would you buy? Why would you listen to anyone in the world tell you you should be buying that? All right, well, I don't care if it's an institution or some guy, some trading guru. Listen to the market. That's the source. What is the source of your trading? It's the chart in front of you. So why wouldn't you listen to that? And why would you listen to some guy in a chat room or some guy on TV that supposedly knows everything? The market just about all the time tells you what it wants to do in advance. The trouble is we've never been taught to listen to it. We're always taught to listen to someone or something else. Let's look at another example here. This is an older example. I'm going to share with you some older examples, then I'll share with you some examples that are as recent as today in just a few moments. But we see here in CREE, well, this kind of looks like it was going lower. Now it's kind of going up a little bit, but now it's going sideways. I have no idea what this is going to do. In fact, the chat room I go to, they say we should short this because it's just going to come back up here. There's major resistance. The institutions are all selling. The volume has dried up, and most likely it's going to come back down. Well, let's listen to what the market wants to do. Forget about what everyone else is saying what's going to happen. What does the market want to do? Well, we apply the 50-period moving average. And initially, we were below the 50, okay? So we knew that we were either going to be on the sidelines or looking for shorting opportunities. Remember, the buy-sell line is not a strategy. It doesn't tell us to buy or sell at the market. It simply tells us what side of the fence to be on. It tells us what our bias should be, all right? But at this point, we start doing what we call oscillating above and below, above and below. So is the market telling us anything? Well, yes, in all actuality, it actually is, because as a rule of thumb, look for at least 3 to 5 bars to close either above or below the buy-sell line, the 50-period moving average, before an overall trend can be established. So as we look now, we see, well, we're definitely below, but at this point, we start oscillating, and now we have 1, 2, 3, 4, 5 closes above. So what is the market telling us? It's telling us that, not definitively, and there's no guarantee, but it's telling us that most likely the odds are it wants to go higher. Okay? So at this point, if somebody, your brother-in-law or some trading guru was telling you to short this, don't listen to him. And that would have been good advice not to listen to him, because look what happened to the stock. Do you think the stock was trying to tell you something? Remember, this is not a strategy. It was not telling you to buy at the market. It was just giving you clues. In fact, it was screaming out clues as to which direction it wanted to go. Remember, we're teaching you how to listen to the market. We're not teaching you how to listen to some convoluted indicator or some master system that never fails or some trading guru technique. We're teaching you how to listen to the market for the very first time. Let's look at another example here in Under Armour, UA. Okay, this is an older chart, once again, a daily chart. Once again, the way most traders trade, they say, well, Steve, down here, all the indicators were oversold. So I bought some, and it bounced a little bit and then made new lows. But right here, I went to my chat room, and they said that this was a double bottom, and that the institutions were buying here, and that the volume was being very strong on the upside. So I bought some more, and it worked out pretty well. But guess what? About 3-4 weeks later, it's making new lows. Okay? So why isn't this working? It's very simple, because the market doesn't want to go higher. It really wants to go lower. Why? Well, where is price in relation to the 50-period moving average? Price has always been below. In fact, way back here, we knew that price was below the 50. So you should never have been looking at this from a buyer's point of view. You should have been looking at it from a seller's point of view if you wanted to trade it. In other words, every time that we bounced, you should have looked for selling opportunities. Every time there was a bounce, a sell-off came. Every time. So this is what we mean when the 80 percentile has a higher level of consistency, and they join that 5%, or I should say the 5 percentile has a higher level of consistency, and they join that group because they have simply applied the 50-period moving average. They are on the right side of the market. Here's another example here, because I don't want to give you some idea that this is just like some master technique or some indicator that never fails. Remember, we're just trying to improve the odds, to give you some more consistency. This is not 100% foolproof technique, but it will increase your odds. So that's all we're trying to do. As we see here in this older chart of Merck, we see here that price originally crossed over. We have consecutive closes above. So let's say you had a strategy on this breakout that said to go long. Okay, so you purchased right here, and it's working out pretty well. After all, you had 5 closes above and then a breakout, so you want to buy this. And it works out pretty well for the next week, but then all of a sudden you have a series of down days, and now you're losing money. Or at the very worst, you're breaking even maybe, but you're still in the trade, all right? So you're starting to wonder, boy, I shouldn't be in this long. I'm in this trade for about a month now, and it worked out in the beginning. Now I'm starting to wonder, okay? Is the market telling me anything? Well, so far we are still above the 50-period moving average until we get to this area right here. The market is oscillating below, above, and it's trying to tell us something. Remember, a rule of thumb, 3 to 5 closes either above or below the 50 will tell us its direction. Well, we do a count right here of this area, and what do we have? Starting here, we have a total of 9 closes below, 9 consecutive closes. So is the market trying to tell us something? Now at this point, if you're still long, you have a loss, not a great loss, but a loss. I would personally sell right now and just say, listen, the market is trying to decide what it wants to do. It's given me a red flag here with 9 consecutive closes below. I think I should be out of this trade. I'm going to take my small loss and get out. And that would have been, once again, some good advice because the stock fell 8 points in the following week. Now, wasn't the market trying to tell you something? The market was actually screaming to get out. And it gave you fair warning. Most traders would say, well, this is really unprecedented. This was major support. This is where all the institutions were buying and all the major houses were buying. We don't understand why this broke down. There's no reason to focus on those things. There's no consistency in those things. If those things worked, well, why didn't they work for me when I was using them some 40 years ago? Trust me, everything that you're using today, probably some master technique or system or indicator, I used 40 years ago. And it didn't help me when I struggled my first year of trading. So why should you focus on it now? There's no more likelihood that these things are going to work 40 years later. Okay? Now, I know a lot of you are saying, well, sure, Steve, well, I'm sure maybe you cherry-pick the best examples. And, does this really work on important issues? I don't trade those stocks. And what about, when the market really makes a major move or so? Does it really work? Is it really that important? Well, okay, I can understand the doubting here. Let's look at a chart of the Dow, okay? Let's look at a chart of the Dow and how we had a really nice run up, but now we're starting to have some second thoughts here because we're kind of oscillating back and forth. Now, this is the Dow Jones daily chart of the Dow Jones. The only trouble is, if we look down at the chart here, this is October 1987, all right? This is not now. This is not, 2018. This is 1987 when I was on the floor. This was a good 30 years ago, all right? 30 years ago. Many of you probably were not even trading then. And let's see if the buy-sell line could have helped us. Once we apply the 50, we see that coming into the crash of 87, prices were well above the 50-period moving average. Coming into September, just about 31 years ago, exactly to this date, right now, in September, we started having a few closes below, closing back up, having more closes below, closing back up with less closes, and then more closes below. So we see once, twice, 3 times closing below. Now, even though we haven't broken down yet, once again, this is the market trying to make up its mind. It's having difficulty deciding whether it's going to go up or go down. And in my opinion, it had a lot more closes to the downside below that 50 than it did above it. So this was a tremendous warning to everyone a full month in advance that the market may be going down. And we all know what happened weeks later. Now, the crash was this day right here, okay? And you see what led up to that. So this gave you fair and ample warning to get out of the market prior to the day that would have been comparable to a negative 4,000 point drop in one day today. How would you like to be trading the market and see it down 4,000 points, okay, with no restrictions? Well, that's the way it was 31 years ago. Now let's go a little bit further into the future. Let's look at a weekly chart. This is a weekly chart now of the spiders, okay? That's the ETF that represents the S&P, okay? Once again, we're having price above the 50, and then we're starting to oscillate above and below, okay? Look familiar like the last chart. Here's the only difference. Look at the time on the bottom. This was January 2008, over 10 years ago, all right? So the market was doing well on the spiders, and now we started to close below. We started to oscillate below, have a few closes above, and then more closes below. Once again, the market is indecisive, but more than that, it's really pointing out a red flag that we have more closes below. You should be taking warning. Either if you're long, you may want to sell half your position, or if you're more aggressive, sell everything. If you're long, maybe you want to move your stops up to protect yourself just in case it does go down. Or if you were thinking about going long, well, maybe you just might want to wait till a little bit more confirmation that you're going up, okay, and that you have consecutive closes above the 50. And lastly, if you're really an aggressive trader, maybe at this point, you may want to look for some shorting opportunities. And that would have been the best thing to do because in the following weeks, that was the beginning of the 2008 financial crisis that led into a terrible recession and that really had strong losses for a lot of people in the market. Some people lost everything in their accounts. Okay? Was the market telling you something? Okay? Was that 5 percentile on the right side of the market that uses this technique? Sure they were. Now, I want you to go and have a little homework assignment right now. Go back and research your last 10 to 20 trades. I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line. And this does not matter, we're focusing on stocks right now, but let's say you say, well, Steve, I don't trade stocks. I trade futures, all right? Or Steve, I trade monthly charts of the currency pairs. It makes no difference. This should be applied to any chart, any direction, any time frame. And guess what? It's simple. You do not have to look at a higher time frame to decide what to do on the lower. If you want to, you can, but there's no reason to do that. What we tell our students is this: keep it simple. If you're trading a daily chart of Apple, plot the 50-period moving average, and that's it. You do not look and have to see what the weekly chart or monthly charts are doing. You can if you want to, but there's absolutely no requirement to do that. Trade the chart you're looking at. That's all that is required. So go back and look at your last 10 and 20 trades. You think this simple but powerful rule would have helped you. That's the power of the buy-sell line. Now, we've created a brand new feature, Pro Trader Strategies and myself, And we developed this feature called the fluid feature on our platform, which takes the buy-sell line a step further. Let me show you what I mean here. The beauty of the fluid buy-sell line is that it not only tells you the overall direction, in other words, what side of the market to be on, but it also tells you the momentum of that particular market you're watching as well. Let's see how. Here's a chart of GE. Remember, we looked at that before, but this is a daily chart. Obviously, it's been going down. The first thing you want to do, the process we talked about, a simple process for finding the trend, is on our platform, click on buy-sell line. Now, there are a number of ways to watch it. The most easiest is the 50-period simple moving average. We have 4 different features applying the buy-sell line. Let's look at our new feature, which is a fluid. You would simply click on the fluid feature in our drop-down menu, and instantaneously it changes the screen from white to 2 colors, kind of reddish orange and a nice blue. All right, so what does this mean? Well, we use that old sailor's adage. Remember, red sky at morning, sailor take warning? Well, here we say red sky at morning, trader take warning. What does that mean? Well, it means that you should have a seller's bias. In other words, you're in the sell zone. So you don't want to be buying anything. If you're a conservative trader, you're on the sidelines. You're not doing anything. Take warning. If you're more aggressive, you're looking for selling opportunities. And conversely, blue sky at night, trader's delight. This is when you want to be a buyer. You have a buyer's bias, okay? Obviously, there are no buy setups here, so there's nothing you can take advantage of. So this should be something looked from the very beginning as a selling opportunity. Now, some setups, some signals, remember, work better than others. Why? Because they have strong momentum behind them, all right? Imagine, I always use this metaphor, imagine you want to go down the river. It's your vacation, you're in the mountains, and you want to go down an inner tube, and what you want to do is you want to have a nice current behind your back. So you go into your inner tube or to your rowboat, and you go in the river, and as you can see, once you have a nice current, you're kind of moving very nicely. But when you get into those rapids, when it's really moving very quickly and aggressively, you're moving very quickly, and it's really moving. Your rowboat or your inner tube is moving very fast and aggressively, okay? We have found the same way with the slope of the fluid feature. When you have a strong downward slope, as you see right here, this is oftentimes where the best signals will appear. Now, it doesn't matter if you're trading one of your strategies, one of mine, or someone else's. This is where you get the highly consistent setups here when have a strong slope to the downside. Now, this can work to the upside as well. Let's look at this example of HPQ. Once again, we just have a blank chart here. We apply the fluid feature, and we see now that earlier in this display, we were at the sell zone, so we didn't want to buy anything until right here we had consecutive closes above. So once again, this is not a strategy. This is not telling you to buy at the market because there's really no rules or consistency there. This just means that you're going to have a buyer's bias. So what you want to do is wait for this very strong upward slope right here. This is where the nice setups are. And I can see a number of our strategies generating signals all along the way up here. So this is where the real meat and potatoes is when you see a strong upward slope. So you see how the fluid really helps you with that. It helps you see that very easily and strongly. Here's another example we looked at before. This was the spiders, the weekly chart of the spiders, okay? All you would have to do, going back to 2008, click on the buy-sell line, click on fluid in the drop-down menu, and the screen changes from white to blue and orange-red. All right, now we can see the slope of the buy-sell line was very strong. And look what happened right around this point in November and December. We start to flatten out. So that was your first clue that the market was running out of gas. Do you see how it's kind of flattening out? Along with that, we had these early warnings right here of 1, 2, 3 closes below, then 1, 2, 3, actually 4 closes below or 3 closes below again. So this is a big warning with the fluid telling us that, you know what, even though this hasn't started to go down strongly, I think I'm going to get out of this market. And that was the beginning of the 2-year bear market. Now, after that happened, right around this point, we started to get some very strong downward movement. And those are where the best setups would appear, okay, in terms of consistency. Now, a lot of people say, well, Steve, does this work with news? Because so many times I'll buy something, news comes out, and I lose money. Or vice versa. I'll sell something, the news comes out, and then it goes straight up, I lose money. Well, I'm not here to tell you that everything works 100% of the time. Nothing does. In fact, if anyone ever says that to you, you should run, because I've been trading for 4 decades. Nothing works 100% of the time. All you're trying to do as a trader is to increase your odds for consistency. That's it. And the best way to do that is to listen to the market. I mean, why would you bet on something else when you should be betting on the horse that you're going to be riding, right? So that's what we're doing with the buy-sell line. We're listening to the market. And many times, it's not guaranteed, but many times it will give you fair warning in advance of a news event. For example, this came out, news event with Yahoo Finance in September, just about 3 weeks ago, September 4th. Amazon is now a $1 trillion company. Okay, Amazon just became the 2nd member of the $1 trillion club. The e-commerce juggernaut hit the 13-digit milestone Tuesday morning when it briefly touched a certain level. So, okay, this is good news. This is the way most traders would trade. Or if they're investing, they'll say, well, you know what? This stock has been going up. I've missed the boat. I'm going to buy this. I'm going to just buy an out, or maybe I'll buy long-term calls, but I need to be long this thing. It's just going to keep going higher and higher, and I've been waiting. This good news now, boy, you know, it's how can you fight a $1 trillion company? Well, I'm not here to tell you that the news is bad. We're just here to show you that many times the buy-sell line will give you a fair warning, because had we simply added it, well, you would have seen that, you know, in May 2018, you had consecutive closes above, and it was telling you well in advance with the strength of the buy-sell line, the fluid buy-sell line, that these were some nice buying opportunities. Every time we sold off, rather than think that you should sell this, it's topped out, it was actually a buying opportunity. Each and every time you had 2 or 3 downward days, okay? And right here, we knew well in advance a good, you know, 100 or so points or 1,000 points lower that we should have been buying this. It was later reported, this was just a week or 2 ago, that Steelcase soars on second quarter earnings, okay? The shares of Steelcase, SCS, rose on Friday after the office furniture company reported its second quarter results. Now, Steelcase produced double-digit revenue growth, beating analyst expectations. As of 12:30 p.m. Eastern Time on the 21st, the stock was up about 15.5%. So once again, this is the way most traders would trade. They'll say, boy, this is great news, I'm going to buy. And that's why the price rose up so much, because everyone is buying off that great news announcement. Could the buy-sell line have helped us in advance? Well, once again, you simply add the fluid buy-sell line. We see that coming in prior to the news, we were actually in the sell zone. We had a seller's bias because nothing was happening. But right here, at the end of August, we had 5 consecutive closes above. This was our warning that if you were thinking about buying this, well, the stock, not some analyst, not some earnings report, but the stock was telling you it wants to go higher. Don't you think that's fair enough warning? Don't you think it's a great edge to have prior to the news coming out almost a month later? Remember, as I've always stated, and as my mentors taught me, the market, not some guy in a chat room, not some trading guru, not some analyst, or not some institutional traders, but the market, the source of your trades, is always telling you what it wants to do. Your only job as a trader is simple. It's twofold. You only have to do 2 things. The first thing is to listen to it, to find out what it wants to do. Does it want to go higher, or does it want to go lower? And then once you find out, then you're just supposed to jump on board in that direction. That's it. You don't have to look, if you don't want to, you don't have to look at earnings. You don't have to look at volume. You don't have to look at a ton of indicators. You know, so many people come up to me and say, Steve, I want to learn how to trade, but you know what? I have no experience. In fact, I have a degree in political science. I don't know anything about the markets. I really don't understand them. I don't understand all this mumbo jumbo stuff. Is it going to be difficult for me? And I said, guess what? I don't understand that stuff either. I don't look at earnings. I don't look at news. I don't look at volume. I didn't have a degree in economics, so I don't understand that as well. I just listen to the market. I can teach you how to listen to the market. I can't teach you how to decipher earnings. I can't teach you how to decipher what the institutions are doing. I can't teach you how to decipher what some trading guru thinks is going to happen in the market, because there's no consistency in any of those things. But there is a consistency in learning how to listen to the market, and that's what Pro Trader Strategies and I have done. Now, I want to do something. I told you I was going to share with you charts that are as recent as today. So I want to share with you some charts that are actually live on our charting software package. But please remember, I have to share with you our disclaimer again, because even though I'm going to show you a lot of performance results using our platform and our buy-sell line fluid feature, please remember that there is no guarantee that any of the results I'm about to share with you will be repeated in the future, and that these examples I'm about to share with you are strictly for educational purposes only. So let me just toggle over here onto our platform. As you can see here, this is our platform, and I'm looking at Facebook right now. Okay? And remember, once again, if you have any questions, I'll ask you if you'd like to look at any of your own stocks, but just hold off a minute. Let me go through the FANG stocks right now, okay? This is Facebook, all right? Now, Facebook had a really nice run up until it had some terrible news in July, and then we see it all kind of fell out of bed. Here's how simple it is to be in sync with the overall trend. As we can see here, we have all of our different ways of applying the overall trend. Let's go to the fluid. Once we apply the fluid, we see that we had a really nice, strong fluid upward flow. And some would say, well, Steve, look, the news came out and you would have lost tremendously here. Well, maybe, maybe not. In fact, in a few minutes, I'm going to share with you how you could have taken advantage of it and not gotten hurt at all. But the best setups are always right here, as you have this really nice, strong move. And then as we've been in the lower sell bias zone, look at the nice downward slope, okay? So this is telling us that we should still be a seller of Facebook. You should not buy this until you have consecutive closes above. Every time we bounced, I'm sure people were saying, that's it, we're going to bounce and we're going to go all the way back to make new highs. And look what happened. We went lower. Another bounce, we went lower. And now it looks like it may be setting up for another bounce again. So that's Facebook. Let's look at the next one. Let's look at, we'll look at Apple, even though it may not fit in with the FANG. I'm sure a lot of you are interested in Apple. As we look in our platform here, we see that Apple has been above its fluid buy-sell line going back some time now, and it remains above, all right? Every time we've had a sell-off, it bounces up. We had a near sell-off here, and it's starting to bounce again. Here's one phenomenon I'd like you to notice that really is simple with our buy-sell line. Now, this is not a strategy, so I don't want you to think once this happens, you would simply buy or sell. But many times we will see in a strong upward slope of the fluid, when price comes down here, this is a prime buying area. So you want to see signals when price is touching the upward slope. And see, price went up, it came back and touched again, and then look what happened. So you'll see this over and over again. Now, if you like to trade higher time frames, all you have to do is click on the weekly on our platform, and you see the same phenomenon. Now, these are all weekly bars. We've been going up since 2016. And look what price did. Price sold off, came down to the rising upward slope, and bounced again. Came down, touched, and bounced again. So on the weekly time frame, there's nothing to worry about. We still have a buyer's bias on Apple. And on the daily time frame, we have a buyer's bias as well. So let's go back, and now let's look at another stock here on the daily time frame. Let's look at Netflix, okay? Part of the N in the FANG stocks. Now, this is interesting. We had some really nice setups here going upwards. I can't tell you what these strategies are, but they are all, we're only looking at the side of the market to be on for consistency right now. But once we had consecutive closes below, right here, this was telling you to get out of Netflix, all right? This was roughly at 365, 370, and it went all the way down to 310. So you would have saved yourself roughly about 50, 60 points there. We had a really nice bounce up here, and then it sold off again. But in the last 2 or 3 weeks, what has happened? We've had consecutive closes above. So even though the slope of the fluid buy-sell line is still going lower, the market is giving us signs that it wants to go higher. So this is something that is not, a great setup, but it's still telling you that right now the market wants to go higher. So if we look at the weekly time frame, we can go out at another time frame, we apply weekly, and we see that there's absolutely nothing wrong with the higher time frame. This actually wants to go much, much higher. So if you like to look at higher time frames to tell you what to do in the lower time frame, well, the two are now in sync. Although that's not required, you can still use that if you so desire. Let's look at the last in the FANG stocks here. Let's look at Google, okay? You see how simple it is to apply all this on our platform. We made it simple on purpose. Now here you see in June of 2018, we started to go up. All right, the buy-sell line was going lower the way it was in Netflix, but now we have a nice rise up, and now the fluid buy-sell line is really rising. Look what price does again. It comes right down, touches it, and has this really nice bounce off there. Came down next to it again, didn't touch it, but bounced again. But then this time, it didn't bounce. So what are we seeing here? We have consecutive closes below in Google, and look what the slope is doing. The slope is now rounding off and kind of going sideways. So there's not a lot of momentum there. So until we get consecutive closes above, it's buy-sell line, it's fluid buy-sell line, and we see a strong upward slope, there's really no consistency in buying this. In fact, I would either stay on the sidelines or I would look aggressively to go short. Now, if you want to see what this looks like on a weekly chart, there's that phenomenon again. We have this weekly chart of we're going strong, we come down and touch, and then we bounce off. Now, on the weekly time frame, the higher time frame, there's absolutely nothing wrong with being long Google because it's above. This is why we say only trade the chart that is generating signals for you. So if you're trading weekly signals, that's the only chart you need to look at. You don't need to say, well, Steve, but the daily is below. That does not matter. It doesn't come into play. Or maybe the monthly is below. It does not matter. I've been trading 41 years now, and I have found no consistency in applying two different time frames to find out what the trend is. It's just, there's no consistency in that. I don't know. It's almost like an urban myth. But a lot of traders rely on it. We're not here to tell you not to trade that way. It's just, if you're getting my opinion as your mentor, I don't use it because I've never found consistency in it. So it's up to you, okay? Now, I'm going to do something I rarely do. I'm going to actually take your request. If you'd like for me to look up a stock that you're interested in, perhaps you're in it right now, and you'd like to know what you think it is in relationship to the buy-sell line, I can quickly punch it up. So if you'd like, go to your question and answer box and just simply type in something you'd like me to look at, and I'll look at it for you. Someone is saying Amazon. Okay, I'll punch up Amazon. Remember, just type it in the question and answer, and I will punch it up for you. If we look at Amazon right here, we see that, well, it's just, once again, it came right down to that rising fluid buy-sell line, and look what it did, okay? It just bounced up there, and it's just a great opportunity that you see happen over and over again. I know I'm seeing a lot of people are asking me to punch up currency pairs of futures. I'm just on the stock data right now. I don't have the futures or the other. Even though we have Bitcoin data, currency data, we have a lot of other things. But right now I'm just focusing on stocks. I don't want to slow down the presentation because we have a limited time. But trust me, you'll see the same and easy things on futures, currency pairs. I use this on my intraday future trading on tick chart, so it does not matter. Okay, so that's Amazon. If you want to see what that looks on a weekly chart, I'm sure weekly it's going to be just as nice. It's going to be above, yeah, well above, okay? So there's nothing wrong with being long Amazon. It doesn't matter if it goes down a little bit, as long as it's above the 50-period moving average. As you can see here, we had a nice sell-off from 2050 all the way down to 1900, all right? That was a buying opportunity because now it's already come back half the distance. Somebody's asking me about Ford. Okay, we'll punch in letter F. As we can see here, Ford, well, don't you think you would have liked to have applied the buy-sell line right here, okay? This is how so many traders trade. They'll once again see that price is too low. Someone will tell them that, oh, Steve, this is a steal. It's a $10 stock. You got to buy this. Ford used to be a high flyer. This stock is worth at least $20 or $30. You can't pass this by, all right? So you buy it here at roughly 10 or so, and look what happens. Now you're probably thinking about selling it, and most likely when you sell it is the time it's getting ready to go back up. Do you notice here that we are kind of just slowly curving when we went over? It looked very similar to Google. Remember, Google was below, and we had just kind of a flat fluid line here, but now once it starts to go lower, then you get this real strong downward. And this is where every time it bounced was a great sell. Every time it bounced, a great sell. Here's the phenomenon, again, we talked about to the downside. It touched the line and then sold off. So